Alright, good morning everybody. We're gonna get right into explaining some things here. I'm gonna mark this on my chart. This is what I'm looking at right now. So the 10 o'clock silver bullet is my trading model that I've been introducing to people on social media and YouTube. You'll find a lot of videos that I've posted recently on using the silver bullet. And essentially what the silver bullet is a draw on liquidity and an entry on a fair value gap during a specific time window. And we'll talk more about the time windows in a little bit later. Right now it's 9:57 New York Standard Time. That's the time that we use to look at trading charts. It's not your local time. It goes off of New York time. That's where the exchange is, the New York Stock Exchange. So we use that time for any algorithmic trading. So what I'm looking at right now, just to kind of go over some analysis that I've already done pre-video, is I'm going to open up this bigger chart right here. So what we've done in the evening is essentially we started 12 o'clock midnight right on this candle right here. And essentially what we did is we moved up and then we have this big move down to a specific level that I had predetermined, which is this 4-hour IFVG high and 4-hour IFVG low. Those are important price levels for me. And a setup that I like to use on Fridays, excuse me, is called TGIF, or Thank Goodness It's Friday. And essentially what that is a retracement back into the range of the previous week. So as you can see here, had a lot of up movement during the week, and so on Friday it's most likely to retrace and go lower if it's been trading higher all week. But with the silver bullet, I am not looking for a short this morning. I'm looking for a long, and a specific area of interest to me is this gap that I have on the chart here, this yellow gap. It's called a new day opening gap. It's the difference between where we closed yesterday and where we opened at 6 p.m. yesterday. You can see the difference here on this candle. We closed, where is it? Yeah, right here. So this candle closed. Black candles are, for me, are down close candles, and green candles are up close candles. So this candle is black, so it closed lower, so that's the closing price right there. And then the next opening price, it jumps all the way up here, and that is a new day opening gap. Those are areas of liquidity that will be referred to within the day, during the day. So I'm going to go back down to my chart here, and looks like I missed my initial entry. So this is not a perfect setup for me. I missed the entry, kind of going over some some things with you. I would have entered on this candle right as it started because we were in this gap, and I don't want to chase it. So meaning I don't want to chase price to this level where it's already here and my entry would have been right there and my stop loss would be right there. I am looking for it to expand to this area. So I don't want to chase it, because if it comes back and reverses on me, then I take a bigger loss than what I originally wanted to. So what I'm going to do is I'm going to go down to a 30-second chart. I'm going to reset my chart here. That way I can see the levels a little better. Okay. So we have, this is a potential area for an opportunity to get back into the market, get in sync. It probably won't come back into here. It'll probably just expand higher. That's the kind of nature that these gaps that I'm looking at right now tend to form. And it did hit that area. And this would have been my silver bullet. I would have got in here and traded to there. That's 10 handles. It's more than what my model offers, or what I usually take out of my model. It's okay though. I'm not too worried. I think I can get back into this trade. I want to get this so that it's a little more presentable, a little easier to see. And we're not panicking yet. There's no panic. You can't panic in trading. If you missed an entry, that means that there's most likely going to be something that you can re-enter off of. I like this. So this candle, if it comes down and touches it, then I can go long. It doesn't have to get down to this fair value gap. Just like that, I can go long. But I want to see how it trades at that level. If it trades to it, and I can start seeing it try to bounce away, then I can go long. If it goes below it, it'll come down into this fair value gap, and then I like that as a potential entry as well. We're just going to go one contract. See how that candle closed right at the midpoint of that candle? I like that. Now it went lower, so if it goes lower, I'm anticipating a return back into this fair value gap. See how this candle isn't closing below this black candle? I like that as a potential entry. And right here, I'm going to go long. Place my stop loss at the low of that candle. I don't want to see it go below it. And I'm going to put it a little in to this fair value gap below the midpoint. And I'm going to place my take profit at this point. So from here to there. I like that as a level. We have these levels up here. This is what I'm really aiming for, is these relative equal highs. You want to look for areas where the market is smooth and where it's jagged. So the market's smooth, you can see right there how there's kind of a smoothness to this level, whereas down here it's very jagged. It kind of looks like shark teeth. And that's exactly what this is. This is the sharks in the water, more or less, and they're they're playing with everybody and taking them out of the market so that they can get in. Turns on a dime, and now they're starting to make their money. And like I said, I'm really not too worried about this trade. This is going to be a really good trade. I'm going to place my stop loss at the low of that candle now. It should not go below that candle. I want to see this expand higher through this yellow shaded area. I want to see it really start to rip through here. Yes, I know this is a down close candle. That's a black candle. Excuse me. But I want to see it start trading higher. And part of trading is sometimes you can lose. That's the risk that you take. My initial entry was not met. I didn't get my entry, so I tried to find a re-entry point, and this is a good entry. I'm okay with this entry, especially where it's staying above this level and it's just coming back and hitting it and hitting it and hitting it. And now I'm anticipating for it to run past it. And it hit my stop. So I got stopped out on that trade. That happens. If I would have got in on my original entry, we would be okay. That's part of trading, is sometimes you lose, sometimes you win, and the goal is to win more times than you lose. So I can potentially get back into the market. And you're saying how? Well, see how it traded back to this fair value gap? I want to see it leave a portion of it unfilled, meaning this, from this midpoint here, I want to see it leave that bottom portion unfilled, and it can only hit the top portion from here to here. I don't want to see it go lower than 50%. If it doesn't go lower than 50%, I will look at getting back into this trade and going long. I do like that. I'm getting back in the trade, placing my stop loss. One tick below that fair value gap. And I'm just going to get a measurement here. So in this trade, I can potentially take 10 handles out and a potential loss of 4.75 handles. I still like this as my draw above there. So I want to see it really start to trade higher now. Just gonna look at what's going on here. This is the NASDAQ contract, and what they should do is they should follow suit. They should follow each other. But you have this phenomenon that's taking place right now where you have this high and this high, and then this high and this high don't match. See how that's lower and this is higher? I don't like that signal. That means that I am potentially on the wrong side of this trade. but I want to see if this candle or the next candle can break above this candle and reach for these highs, then I'll be on the right side of the trade. I just need to manage it correctly. See how this candle gapped lower and is starting to trade lower? That means I'm potentially on the wrong side of the trade. I need to manage this very actively. See how it's just playing on the top of this red shaded area? That's a high interest area, and it can just bump it, and then really start to run off. And that's what I'm anticipating. I'm anticipating this to be a false signal. This SMT here. For those of you that aren't traders, this is what I am referring to. So you see how that made a high and this made a low. That's called SMT, or smart money tool, and it's just a way of looking for potential turning points in the market. That needs to go right there. So now what I want to see is I'm either anticipating it to run for this low or to really start expanding higher. I like the thought of it expanding higher to take out these smooth highs that we made at 5 a.m. I like that idea. It may not give it to us though, where it's kind of coiling and just becoming very flat in price action. It doesn't have a lot of movement. It's flat right here. This is where I need to manage this trade effectively. Meaning if I start seeing it really run lower, it's probably going to take out my stop. And if it starts running higher, then it's most likely going to start trading to the level that I have indicated. And I have my finger on the trigger just in case I need to close this trade. If I would have got into the trade at my original trade idea that I had at 10 o'clock, I'd be waiting for this to expand higher into this area, and I would have taken a partial profit at the midpoint of this yellow shaded area on that line. That would have been a partial, and then I would have trailed my stop loss to where I have my stop loss right now is below this gap. And I'm looking for it to expand now quickly in this area, especially where this candle, green candle, broke above that area. I really like that as an idea. And the NASDAQ broke above its SMT. So this is no longer an SMT because it's not a crack in correlation. It's a continuation of this move. And so now I'm looking for this candle and the next 2 or 3 candles to really start to expand higher through this shaded area. Yep, just like that. I'd like that. I want to see this candle and the next candle really start to reach for these highs. I'm trailing my stop loss. I don't want to see it come back below this low. I want to see it stay above that. I want to see if this can stay. The lowest it can go is that. That area right there, that's the lowest it can go for me. I want to see this candle on the next candle really start to trade higher. Create a kind of a swing area right here and expand high. And as you can tell, my language that I use, it's very anticipatory. I'm trying to anticipate certain things happening, and if they don't end up happening, then I have a counter move. It's moves and counter moves. And as you can see, I anticipated this big green candle. I'm anticipating the top of this area now to act as kind of a springboard and really send price higher towards my area. I do not want to see it go below this low. So I'm going to trail my stop loss, and now I'm going to let it go. I do not care what the outcome is now because I'm automatically in profit. There is nothing, if it comes down and it hits this red line here, I'm in profit because this blue line right here is my original entry point, and so I'm automatically in profit. I will just let this run and it'll do its thing. My model, the silver bullet, is I'm looking for 5 handles, which is 20 ticks. So right now you can see we're at 22 ticks, which is above and beyond what my model calls for. If this candle, I'm looking for this candle to expand higher now, and when that candle expands higher, or the next candle, I will take profit. If this can get to 25 handles or 25 ticks, just like that, I am out of the trade. That's the silver bullet. It didn't have to get to my target, meaning I don't have to be right in order to make money. Yes, I took a loss in here. It was a very small loss. So what this trade did when I got back into the trade on this candle is it got me back into the green. I am not looking to be correct in everything, in all part of my analysis. That's not part of trading. Part of the most important part of trading is that you make money. And if you can really make money, that's the goal. So I'm gonna delineate this area on my chart just so that you can see it. And this is how traders get better. This is how they learn, is if you take money out of the market and you have a target, you want to see if it will get to your target. Even though it came back down, I'm looking at this level. I really don't want to see it go below this low. If it goes below this low, it has a potential to come down into this area, shaded area, hit that, hit this one more time, and then expand. But it really shouldn't come back to this gap here. So if you look at price, when I say my model is 5 handles, we'll make this 5 handles, and we'll make this 5 handles. So in future contracts, every handle, a handle is a $1 move. So you can see here, that's a 5. If I move this to 1, that's essentially a $1 move in the S&P 500. So a handle is a trader term for a dollar. And so we're going to go to 5, which is a $5 move, or 5 handles. Each handle in micro E-mini S&P 500 futures is $5. So for every $1 move, I make $5. So my model says I take profit at 5 handles, which means my entry was right there. My target should have been the top of this shaded area, and that's where I should have taken profit. I waited till it was about up here. Let's put our execution on here. So I got in right there. That was my fill, and then my exit was right there. So right on this candle right there, that was my trade. So I took out 6.25 handles. On this trade, we got in right here and we got out right here. So that is a loss of, let's see, right there, and then we got out about right there. Yeah, it was about right there. So that's a 3.75, give or take 1 or 2 quarters, and that was a loss. So we made that back, we made that up with taking that 25 ticks, or 6 1/4 handles. You can see how price is reacting. Just as a note, you can see how price is reacting at this level. I'm gonna expand this level here. And so that is essentially the silver bullet. Did it ultimately reach my buy side liquidity? Not yet, but it could. I'm anticipating it too. I think that this is an area where there's a lot of liquidity resting, because everybody who traded in the evening or the morning, early morning, they would have been taking trades all in here and placing their stop loss through here. And the way that I trade is I attack retail logic and I trade against the normal YouTube trader or retail trader. And as you can see now, it's starting to reject these areas that I had in mind, which means we can potentially start trading lower. And if we're gonna trade lower, well, just like anybody else, where's liquidity resting for retail traders? If they went long here, they'd be resting. I really like those because they're relative equal lows. These are another relative equal lows, kind of where lows cluster together. That's where I'm looking at on the chart. It's visible, it's seeable. Areas like that. But I'm gonna sit here and watch and see if it hits my target. But that is essentially the silver bullet. It's a draw on liquidity. If you have to have a target in mind. Just like how, you know, if you're aiming for a target, you know, with a bow and arrow or a rifle or something, you have to have that target in your sight. Otherwise, you're just gonna shoot air. And the same thing is with trading. You know, if you don't have a target, you're guessing, you're gambling, and having a target takes the gambling out of trading. And you want to be listening to the analyst that's inside of you, and the trader, you don't want to listen to the gambler. The gambler will tell you, the gambler would have told me to hold for this area, and I would have had to potentially take a loss here. If it reverses, it would have been a loss. And so the trader takes profit, it trader makes money and the analyst analyzes the charts. The analyst tells the trader, okay, this is an area where you are potentially looking for a trade. And that's what you have to listen to as a trader. And it's very difficult to cultivate that mindset in yourself and take the gambler out of it. There's a lot of people that listen to the gambler, and I've had to overcome that. Sometimes the gambler wins. There's no doubt about that. But the whole goal of trading, like I said, is to be profitable. And if you can make money, if you are in profit, you better take profit. Where I was only trading with one contract, I would have taken a partial, like I said here, and then left a remaining portion on to see if it will reach this buy side liquidity. I like this reaction here off of this fair value gap. I would like to see price start to expand higher here again and see if it reaches for this high, then it will most likely reach for this buy side liquidity. That's kind of the hard part of trading, is managing yourself. You're your own boss. You're the only one that can push the button and trade, and overcoming that is one of the most difficult parts. And so your strategy can work, as you can see here. I took a loss, but I followed my rules and I followed my strategy. I still had a target in mind, and so I may have missed the target the first shot, but my second follow-through shot was a hit, and I didn't even have to hit my target in order to make money. So that is the silver bullet. I hope everybody has a great weekend. I am going to end the video right here. If you have any comments, leave them in the comments for me of content that you would like. If you want any content, I'll do more videos of where I explain what I'm trading and what I'm analyzing in the charts. I'm really excited to start doing that more. I have a lot of good ideas for some videos, but if you have any comments, drop them in the comment section. Give the videos a thumbs up, and we'll catch you later. Everybody have a great weekend.